Hey everyone, it's looking like the Biden stimulus plan is going to be passing sometime soon, and it's in the neighborhood of about $1.9 trillion. The House is currently voting on it now after it passed the Senate, and it's looking like it'll involve some sort of stimulus check to most Americans once again of about $1,400 per person, so very significant amount of spending, and this is coming off the heels of the January stimulus bill that was passed. Now, the purpose of this video is not to argue whether the stimulus bill is good or bad as written. Instead, I want to bring three very important metrics to your attention that we've kind of seen play out over the last year. What you do with the information is totally up to you, but I do think there is a lot of misinformation going out there, as well as a lot of data that's just kind of thrown under the rug and ignored, even though I think it's very important. Before I get into three key metrics, I just want to introduce myself so you know where I'm coming from if you're new to the channel. My name's Jack Duffley. I'm a 23-year-old real estate investor and soon-to-be attorney, and on this channel I cover topics as they relate to personal finance and investing and all that sort of stuff. So if you like that sort of content, definitely have a look around the channel, and if you like what you see, be sure to subscribe, as I'd very much appreciate it. Now, the first of the three big data points that I want to highlight is the federal deficit, specifically the deficit from last year, 2020. It's definitely no secret that the federal deficit has been a problem for quite some time, certainly during my entire lifetime, and it seems to only get worse every year. The deficit continues to expand. Tax revenues are not meeting what the government is actually spending. And when this happens, the government has to issue new debt, which often is being put onto the Fed's balance sheet, which I'll get to in a second. But in 2020, the federal government brought in around $3.7 trillion in tax revenue. If you want to average that out, that's something like $300 billion per month. However, the government spent much more than that in 2020. It spent $6.55 trillion in expenditures. That means that the federal deficit was something like $3.7 trillion last year, and that's before we even got into the next bills that passed in 2021. In 2021, the US government has already spent $2.3 trillion on that big omnibus spending package, which had an additional stimulus package in there that had a lot of controversy because of money going to very strange places in some cases, but that's not the point of this video. But you have that $2.3 trillion, and now you're going to add on about another $2 trillion, or 1.9 is the current metric for the current stimulus bill that's probably going to be passing very soon. So we're looking at something like $4.2, $4.3 trillion just on those two bills for the year 2021. And federal tax revenues probably going to be about the same, around $3.7 trillion, unless you have a huge tax increase to make up for this huge deficit. But again, that's probably pretty unlikely. Even if the federal government raises taxes pretty significantly, 10, 20, 30, 40, even 50%, it's still not going to be enough if you're trying to meet the deficit that we had last year and the deficit that it looks like we're going to be having this year. Assuming this new bill passes, the federal government will have already spent more money than it made in the entirety of last year. So that's the first data point, which kind of sets the foundation for this next point, which is the Fed's balance sheet. The Federal Reserve, or the Fed as it's often called, is the central bank of the United States. It controls the money supply and the currency that is issued in the US. So they're the ones who print all those dollars, which actually say Federal Reserve note at the very bottom if you look closely. The Fed has some restrictions on when it can actually create new currency, but the big thing that it does probably most often to create new money is to actually purchase treasuries, or US debt, from the federal government, and then it prints new money to pay for that purchase. So it would look something like this. The federal government would run a deficit, it would issue new treasury notes, and then it would sell those notes to the Federal Reserve, and the Federal Reserve would print money to pay for the notes, and then the government now has that money to spend into the economy as it wishes. Now, the Fed does more than just buying federal debt, but that's the big one I want to focus on. However, they do buy other assets in an effort to prop up markets and keep markets liquid, as they say. So if investors want to cash out, they can, and there's money there. It's easy to facilitate the transaction, and the markets hopefully won't collapse in the meantime. But it does this at the expense of the currency. Since you're printing more and more of the same thing, it makes that thing worth less over time. Now, the Fed's balance sheet expanded very rapidly in 2020. In fact, around March 2020, it was a little bit over $4.1 trillion, and now it's at a whopping $7.4 trillion as of today. That's a $3.3 trillion increase. And coincidentally, that's about the size of the federal deficit last year. A lot of this new debt is being absorbed by the Federal Reserve. It's not like investors are going out and buying this newly issued debt most of the time. That might have been the case long ago. Often the government would issue new debt, and then foreign nations would buy it, investors would buy it as a cash alternative. But with interest rates and the yield that you actually get on these notes being so low, because the Fed is trying to induce more investments into other things besides government debt, you see a lot of investors aren't buying these treasuries that are being issued, and instead the Federal Reserve seems to be one of the only buyers that's actually buying these new notes. And when that happens, you got to print new money, and we have new money flooding into the system. You see some alarming things happen in certain areas of the economy. In 2020, the Federal Reserve absorbed nearly the entirety of the value of the CARES Act, the first stimulus package, and we don't have all the compiled data yet, but I assume that almost the entirety of the omnibus spending package from January will also be absorbed. And if this passes, this new Biden stimulus plan, that's probably going to be absorbed by the Fed as well. And you know what that means. All I'm really trying to emphasize with this data point is to see where the money is coming from. And it seems like more often than not, it's coming from the Fed with newly printed dollars, or they're really digitally printed nowadays, where they just type digits into a computer, the money is there, and therefore the government can then spend it wherever it wants. It's not as though foreign investors are buying a bunch of these notes. It's not as though US investors or domestic investors are buying them. It is mostly newly issued currency, which is going to devalue existing dollars. Now, the last data point I want to emphasize are personal incomes in the US. Now, I'm going to use government stats here from the Bureau of Economic Analysis, so I'm assuming these stats are correct, or at least mostly correct. Obviously, there's going to be errors in a sample of this size, but let's go ahead. From the end of 2019 to the end of 2020, incomes rose in the US by 6.1%. That's right, incomes actually rose through 2020. Now, this is on the aggregate. I'm talking about the whole country here. I'm sure you could cherry pick communities and individuals who are definitely worse off, but that's going to happen in many different types of economies, not just ones that are ravaged by a pandemic. The point is, incomes across the board did actually rise. Now, the question is, why did they rise? If we look at their stats, we can see that wages were actually relatively flat, so earned incomes and salaries, those stayed about the same across the board from 2019 to 2020. But if we go ahead and look at government transfer receipts as a source of personal income, which is really just another way of saying welfare and money from the government being put in individuals' pockets, we can actually see that the near entirety of the rise in personal incomes came from both unemployment and then this other category here, which I believe is stimulus checks. So the increase in incomes across the board for the United States in 2020 was a result of government spending, so unemployment and other welfare types. And if we look at 2021, incomes actually rose 10% compared to the previous month. So incomes are even higher than they were at the end of 2020 because of the omnibus spending package, the extra stimulus that was extended with that package. So certainly we're not seeing this trend reverse. You certainly could argue that that's a good thing, but all I'm trying to emphasize here is that the actual increase in income is not coming from productivity or higher wages, but instead is coming from government spending, and it's not coming from taxes, as we already went over. It's actually coming from newly printed money for the most part. And this is in an environment where the unemployment rate is higher than it was at the end of 2019. At the end of 2019, the unemployment rate was under 4%, but by the end of 2020, that had risen to just a bit over 6%. So certainly a large rise, and it was higher at certain points in the pandemic for sure, but you probably wouldn't expect incomes to rise nearly 6%. Meanwhile, the unemployment rate had nearly doubled by the end of the year. Now, there's certainly a lot more data points we could look at. The economy is a very complex thing. It's huge. It's hard to actually collect data on this sort of scale. So when we get good data, it is very valuable, hopefully, and we can make better predictions for the future. And like I said earlier, the point of this video is not to say that the stimulus bill is bad or not a good thing. The point is, I'm just trying to show you where the money's coming from, how this thing is actually being paid for, and then you can try and figure out what those consequences are for the future. If there's any unintended consequences that the government might not be telling you, that politicians might not be telling you, that the media might not be telling you. What the scope of those consequences are is certainly up for some debate, since you can't really tell what the future will actually hold, but at least we need to see what's happening in real time so we can make better decisions for the future. Anyways, if you like this video or found it informative, then definitely leave a like, since that would help the channel out a lot. And if you like this sort of content about finance and the economy and investing, then definitely subscribe, since I put out new videos every single week. And if you're looking for some personal stimulus, there's some affiliate links in the description below to get some free money down there, so you might as well do that while that is there. But until next time, take care.